Bitcoin has surged to $100,000, adding a staggering $750 billion to its market cap in just 6 weeks. This rapid growth raises significant questions about the future of cryptocurrency and its implications for global finance. Is Bitcoin establishing itself as a transformative force in the financial world? Or does this surge represent a potential bubble of unprecedented scale? Our analysis examines the key factors behind this meteoric rise and their broader economic implications. The ascent to $100,000, a historical perspective. Bitcoin's journey from obscurity to financial prominence illustrates the transformative power of disruptive technology. Since its inception in 2009, Bitcoin has evolved from a niche digital currency to a significant player in the global financial landscape. The cryptocurrency's trajectory has been marked by volatility and skepticism, yet it has persistently gained traction among investors and institutions alike. The contrast between Bitcoin's early valuation and its current status is striking. In 2010, a single Bitcoin was worth less than $1, with its use limited to a small group of tech enthusiasts. By 2024, Bitcoin has reached the monumental milestone of $100,000, reflecting a dramatic shift in its perceived value and potential. Several key events have shaped Bitcoin's price history. The first real-world transaction in 2010, where 10,000 Bitcoins were used to purchase 2 pizzas, valued each Bitcoin at a fraction of a cent. Subsequent years saw significant price fluctuations, with notable surges in 2013 and 2017, each followed by corrections that tested investor confidence. Multiple factors have contributed to Bitcoin's value appreciation over time. Halving events, which reduce the rate of new Bitcoin creation, have historically preceded periods of price growth. Additionally, increased institutional adoption and growing regulatory clarity have bolstered Bitcoin's legitimacy as an asset class. Macroeconomic factors, such as concerns over inflation and monetary policy, have further driven interest in Bitcoin as a potential hedge against economic uncertainty. The $100,000 threshold represents a significant milestone for Bitcoin, validating its position as a serious asset and potentially paving the way for even broader adoption. This price point raises important questions about Bitcoin's role in the global financial system and its potential impact on traditional economic structures. As Bitcoin reaches this unprecedented valuation, attention turns to the complex interplay between government policies, regulatory decisions, and cryptocurrency markets. These factors have become increasingly influential in shaping the future trajectory of Bitcoin and the broader digital asset ecosystem, underscoring the importance of understanding the political and economic context in which cryptocurrencies operate. Political catalysts: the Trump effect on cryptocurrency. The cryptocurrency landscape is undergoing a significant transformation due to shifting government policies. A notable change in political stance has occurred, with former critics now emerging as potential allies of Bitcoin and other digital assets. This reversal has implications for the crypto market's trajectory and future regulatory environment. The impact of this political shift extends beyond rhetoric to potential policy changes. Proposals for a crypto strategic reserve represent a departure from traditional financial policy, potentially positioning the United States as a direct investor in cryptocurrencies. Such initiatives could bolster institutional confidence and market stability, aligning with broader visions of establishing the U.S. as a global cryptocurrency hub. However, this evolving political landscape is not without controversy. Critics argue that looser regulations could lead to increased market volatility and financial instability. Concerns persist that deregulation efforts might result in severe economic consequences, potentially surpassing previous financial crises in magnitude. The intersection of politics and cryptocurrency markets continues to grow more complex. The appointment of crypto-friendly individuals to key regulatory positions and the active support of pro-crypto candidates in Congress suggest a potential shift towards a more accommodating regulatory landscape. These developments have fueled optimism among crypto proponents, while raising concerns among those advocating for stricter oversight. As the political and cryptocurrency spheres converge, the future of crypto regulation remains uncertain. The potential for changes in congressional control and shifts in regulatory approach suggest a possible move towards more lenient oversight. However, striking a balance between fostering innovation and protecting investors remains a critical challenge, with significant implications for the broader financial system. This evolving political climate sets the stage for increased institutional involvement in the cryptocurrency market. As regulatory clarity potentially improves, traditional financial institutions may find themselves more inclined to enter the digital asset space. The interplay between political decisions and market dynamics continues to shape the trajectory of Bitcoin and the broader cryptocurrency ecosystem. Institutional adoption, the new drivers of Bitcoin's value. Bitcoin's ascent to $100,000 marks a significant shift in its market dynamics, with institutional investors emerging as the primary driving force behind its value. The launch of Bitcoin ETFs represents a crucial development in institutional adoption, enhancing Bitcoin's accessibility and contributing to its price stability and growth. The entry of established players like BlackRock into the cryptocurrency space further legitimizes Bitcoin's status within conventional finance. Institutional involvement has notably altered Bitcoin's market behavior. The cryptocurrency's volatility has decreased, with large-scale investors providing a stabilizing influence during market fluctuations. This contrasts with the historical volatility associated with retail-driven trading. Companies such as MicroStrategy have begun accumulating substantial Bitcoin holdings, creating a consistent source of buying pressure that supports prices during corrections. The transition to institutional dominance signifies a fundamental change in Bitcoin's investment landscape. Institutional investors bring substantial capital inflows and employ more strategic, long-term approaches compared to retail participants. This shift has implications for Bitcoin's price discovery mechanisms and overall market structure. As institutional adoption continues to grow, several potential future developments warrant attention. The integration of Bitcoin into traditional investment portfolios could accelerate, potentially leading to increased demand and price appreciation. Additionally, the development of more sophisticated financial products based on Bitcoin may further enhance its appeal to institutional investors. The institutionalization of Bitcoin raises questions about its original ethos of decentralization and financial autonomy. As large financial entities gain greater influence over the cryptocurrency, the balance between mainstream acceptance and the preservation of Bitcoin's fundamental principles becomes an increasingly relevant consideration. As Bitcoin reaches new heights, propelled by institutional backing, it faces a new set of challenges and risks. The next section will explore the potential pitfalls associated with Bitcoin's high valuation and the factors that could influence its future trajectory. The road ahead, challenges at the summit. Bitcoin's $100,000 milestone represents a significant psychological barrier that could influence market behaviors. This landmark valuation may reshape the cryptocurrency landscape, presenting both opportunities and hidden risks. While Bitcoin's history of volatility persists, its journey to this new peak has been marked by notable price swings. After reaching $20,000 in December 2017, Bitcoin experienced an 84% drop, bottoming out at approximately $3,200 a year later. This historical context underscores the potential for substantial corrections even at higher price levels. As Bitcoin surpasses $100,000, expert opinions diverge regarding its future trajectory. Optimists argue that this new price level represents a fundamental shift in Bitcoin's market dynamics, supported by increased institutional adoption and growing mainstream acceptance. Skeptics, however, warn of unsustainability, citing market sentiment indicators such as the choppiness index, which suggests the rally is losing strength. Regulatory challenges pose a significant risk to Bitcoin's high valuation. As the cryptocurrency's market capitalization grows, it attracts increased scrutiny from financial regulators worldwide. The potential for stricter regulations or bans in major economies could significantly impact Bitcoin's value and accessibility. At $100,000, the magnitude of potential corrections becomes more substantial in absolute terms, potentially leading to greater market turbulence. Traders and investors navigating this new terrain must consider that the psychological impact of this threshold may influence market behavior. Historical data shows that traders often react to these psychological barriers, with some choosing to exit positions for perceived safety. Bitcoin's future trajectory may depend on the behavior of both institutional and retail investors during potential consolidation phases. If current patterns hold, Bitcoin could stabilize before attempting further price discovery beyond $100,000. However, the possibility of significant corrections remains, underscoring the importance of risk management strategies in this high-stakes environment. Conclusion: Bitcoin's rise to $100,000 represents a significant milestone, influenced by multiple factors. While institutional adoption has played a role, other elements have also contributed to this landmark. Political shifts, particularly unexpected support from figures like Donald Trump, have altered the regulatory landscape and market sentiment. The cryptocurrency's inherent scarcity, reinforced by halving events, continues to underpin its value proposition. The future of Bitcoin remains a topic of debate among experts and analysts. Its trajectory will likely depend on its ability to navigate regulatory challenges while maintaining its core principles of decentralization and financial autonomy. The cryptocurrency's position in the financial landscape has undoubtedly evolved, transitioning from a niche technology to a recognized store of value asset. As Bitcoin reaches this new threshold, its impact on the global economy becomes increasingly significant. The $100,000 milestone may signal a broader shift in the perception and utilization of digital assets. However, questions remain about Bitcoin's potential to influence traditional financial systems and its role in shaping future economic paradigms. The cryptocurrency's journey thus far has demonstrated its resilience and adaptability, but its long-term implications for the global financial landscape are yet to be fully realized.